Hello, everyone. On behalf of NeoSystems, I'd like to welcome you to our webinar today, GovCon Accounting 101, Direct versus Indirect Costs. This is the first in our series of GovCon Accounting 101 webinars. Quick look at our agenda today. I'm going to do a brief introduction about NeoSystems, then get right into the cost and pricing principles. Then we'll dive into the direct costs. We'll look at indirect costs, and then we'll open it up to your questions. Of course, at any time if you have a question during the webinar, just type your question in the question box. At NeoSystems, we're proud to say, grow ahead, we've got your back office. At NeoSystems, we provide strategic back office services. These include accounting, HR, and IT. And forming an intersection of these three is your infrastructure, your ERP system, and that's where our consulting services come in, because we can provide the insight of where these three services come together. At NeoSystems, we have 500 companies representing over 32,000 employees in our private, secure cloud. With me today, I have Chen. Chen is our Vice President of Client Services. He has close to 20 years of experience in accounting and financial management, focused on government contracting. He provides the strategic financial management advice to our clients, as well as overseeing the day-to-day accounting operations for our clients. As I mentioned, I'm Brian Giblin. I'm a product manager here at NeoSystems, and I work with our clients and other people in the industry to understand your business challenges so that we can develop solutions that can let you be more effective in your day-to-day operations. I'd like to open it up to a poll at this point so we can learn a little bit more about you. You're attending this webinar, so we'd like to know, what is your biggest challenge for GovCon accounting? Are you working with pricing out proposals and want to get them accurate in a compliant manner, knowing what compliance requirements apply to you? Are you concerned whether your staff has the expertise needed, and how could they get the training they need to be fully compliant with GovCon accounting? What about your accounting system itself? Is it meeting your needs? As well as the lack of comprehensive view into your financial performance. Are you tracking your project costs so you know which projects are profitable, which ones are providing you with some challenges that you need to get focused on, or are you having broader issues with your managing your costs and delivering to your clients? See, the results are coming in. I'll give you 5 more seconds. 4, 3. Every time I start counting down, I get a lot more responses. 2, 1. Close the poll. Very interesting. I'm not surprised, though, because winning new business is an important part, and not only winning new business, but winning profitable business is an important part of being a successful government contractor. So 36% of you came in with pricing out your proposals in an accurate, compliant manner. And knowing which compliance requirements apply to you, as well as having the staff who can provide that GovCon expertise. Very interesting results. I'll turn it over to Chen, who will take us into the meat of our webinar as we get into those direct and indirect costs.
Thank you, Brian, for the introduction, and thank you, everyone, for joining our webinar today. And like Brian mentioned, we'll have a session, about a 5 or 10-minute session for questions at the end of the webinar. So the first item that we'll get into is basic cost and pricing principles. Obviously, knowing the difference between direct costs and indirect costs and how to allocate them out throughout your company and your accounting system will obviously affect pricing, how you price out your RFPs, and knowing those differences can really affect, like Brian said, whether the contract that you're awarded will be profitable or not. Knowing the difference between direct costs and indirect costs also affects the day-to-day operations within the company. If you have incorrect indirect rates and you want to make a business decision on either making an internal investment that could cost you in the long run as well. Obviously, invoicing, sometimes if the invoice is incorrect, the government will reject that, and which would obviously slow down cash flow. And then ultimately winning new business. If your rates are too high, chances are you're not going to be winning the RFP that you're going after. So the first item that we'll get into is misrepresenting cost. On the direct side and the indirect side, falsifying, concealing, or covering up your costs through either statements or representations of costs that are incurred within your accounting system, or making or using any false writing or documentation. A lot of times, small government contractors really don't know the difference if they are falsifying or concealing costs, because they just might be doing that unintentionally. For instance, I'll give you an example where you could have a contract that has multiple tasks within that contract. And let's say an employee of yours is working on task 1 and that task has a specific scope of work, but it's basically run out of funding, and you're having that employee move labor out of that one particular task and putting it into another task that has a completely different type of scope of work. That's pretty much falsifying costs. Now, penalties for that usually include fines or a review of your contract with the government. Very rarely does it include imprisonment. Obviously, if you've been misrepresenting costs for a number of years and you've been billing the government for a number of years knowing that you're misrepresenting costs, that could ultimately lead to that type of penalty. So direct costs, the definition of direct costs are found in your FAR section 31.202. FAR is Federal Acquisition Regulations, for those of you that don't know. And it is any cost which is identified specifically for a particular cost objective on a contract. So that could be direct labor, subcontractor costs, consulting costs, direct travel, even non-billable costs are considered direct costs. And they cannot have been included in any indirect cost pool, which we'll go through later on in the presentation. So again, some of the examples of the direct costs are labor that are being charged to a specific contract. Now, also your BMP could also be considered as direct labor. We've already gone into direct travel, some of your consultants, subcontractors, and for those that use materials, materials charged to a contract are considered direct costs as well. Some exceptions for you all that are just starting off in government contracting, some of your administrative staff can actually charge to a contract. For instance, I'll use a contract administrator for those of you that have it. Contract admin folks handle a lot of subcontracting agreements, contract negotiations, funding. Some of that time can actually be charged to a contract. Now, it's most likely not billable, but what it does is that it really increases your direct cost base, which will ultimately lower your indirect rates. And a lot of what we do here is really advise companies on how to structure their indirect rates so that it's most advantageous for the company. Indirect costs. So indirect cost definition is found in FAR section 31.203, and it is any cost not directly identified with a single final cost objective, but identified with 2 or more final cost objectives. So really the costs are spread out throughout your accounting system. It's after direct costs have been determined and charged directly to the contract, basically all other costs that are remaining will be allocated out to your indirect cost pools. For the purpose of the webinar, we will just go through really the 3 most basic indirect rates which are fringe benefits, your overhead costs, and your general and administrative costs, or GNA costs. The rate calculation is up above, and if you're able to determine what your indirect cost pool is and following a DCA compliant type structure, your indirect cost base will give you basically your indirect rate for one or all of your indirect cost pools. First rate that we'll go through are your fringe benefit costs. So this is really what you're offering to, if you're a professional services contractor, this is really what you're offering your biggest resource, which are your employees. So it's any employer pay payroll tax, employer-provided insurance such as health, dental, vision, your paid time off or PTO. That will also include sick leave, any comp time that you have that you offered your employees, and any other type of leave benefit. And then other employee benefits, which we'll get into the next slide. So the employer portion of your FICA, Social Security, and Medicare, your federal and state unemployment insurance, workers' compensation insurance. We already went through health and life insurance. We went through the PTO. Now your holidays, depending on some contractors and companies have they follow the federal government holiday schedule, and some have their own schedule. Your 401k match, and your bonus payouts. Now, the bonus payouts have an asterisk by them because I've seen, and we work with some clients that have the bonus payouts in GNA, some of them in overhead, and some in fringe benefits. Really, it depends on how you want to set up that particular pool account, because once you set it up into a specific pool, you really want to leave it there. And DCA really only care about how consistent the company is and if the company is actually following its policies and procedures. So if you decide to keep bonus payouts in GNA, for instance, and let's say you notice that your GNA rate is running too high, you can't really just move it from GNA to fringe to compensate for that. That would be going back to that misrepresenting cost and really manipulating how your rates look based on the costs incurred. So the fringe benefits cost base, which is really a definition of all your total labor. So all wages, excluding the PTO, sick leave, holidays, because that's actually part of your cost pool. So this includes direct labor, all your overhead labor, and your GNA labor. It also, fringe gets loaded also on top of your business development, your BMP, and if you have independent research type contracts, it'll also get loaded on top of that labor, and any other material handling labor if you have materials or a rate such as that. Next indirect cost pool that we'll go through are your overhead costs. Overhead costs are pretty much all costs not directly charged to a contract that are in operations of the company. So how I like to define the difference between overhead and GNA, which some small government contractors struggle with, is that GNA, it really is the infrastructure of the company. Overhead costs are costs that ensure the company is running. So your rent, your utilities, your postage and shipping, reproduction costs, business meals. Those are all overhead type costs. Sometimes I've seen clients that have depreciation costs in their GNA, and we'll kind of go in, review their indirect rate structure, and advise them to move out certain costs out of the GNA pool into your overhead pool, which will ultimately reduce the GNA. And to be honest with you, having a low GNA is really the name of the game. I mean, that's really what the government looks for. And so in the overhead cost pool, when you're a small government contractor, the CEO or the COO or even a VP within the company, they usually wear multiple hats. And again, for the infrastructure of the company, if you are a company that carries a title, a corporate title such as a CEO, a VP, let's say a Chief Operation Officer, the majority, actually all of your time will be charged to overhead. I'm sorry, GNA. Now, if you are a project manager or a supervisor and you're not charging your time to a specific contract, then you'll be charging the majority of your time to overhead. There are some exceptions, of course, where, for instance, like let's take the HR folks. HR folks work on corporate infrastructure, and they also work on helping employees. So they're actually able to split their time out in whenever they work on corporate functions, they'll charge their time to GNA. Whenever they help employees or benefits type functions, then they can actually charge to the overhead. So in some instances, some of your administrative folks can charge the overhead as well. And again, we'll kind of go through the overhead cost pool. It's indirect labor and supervision, such as your PMs. Employee-related expenses are the training costs for your employees and any indirect travel that they might incur, and then also indirect materials, which are, for instance, office supplies, postage and shipping, and reproduction costs. Some of the fixed prices, some of the fixed charges that we previously discussed that sometimes are in GNA cost pools really should belong into the overhead, such as the depreciation, your rent costs, and then obviously utilities such as internet, computer expenses, and electricity. Now, your typical overhead cost base is the direct labor dollars associated with all of your employees, plus the fringe benefits. Unless you're in the manufacturing business, it's pretty complex, and there's a few different variables used as a cost base, which we really don't have time to go into. But the advantage of having most of your operations costs into the overhead pool is that you're able to split out your overhead pool in some instances where you typically cannot split out, you actually can't split out your GNA cost pool. Your GNA is your GNA. So let's say you review your accounting system and your GL structure, and you notice that some of the costs that we've talked about today are in your GNA pool, and you want to move it to overhead. Well, then let's say your overhead really kind of blows up. Let's say it's from 20%, and all of a sudden it goes to 50 or 60%. It might be advantageous for you as a company to look at splitting out your overhead costs into an on-site and off-site rate. Now, that's the advantage of moving a lot of those costs to your overhead pool, is that you're able to split out those particular costs and then bid one or the other or both, okay? Whereas GNA, if you incur all of your costs into GNA, you basically only have that one rate. And like I said, the name of the game in winning contracts is really keeping your GNA as low as possible. So an on-site rate, or Pool A for simplicity purposes, would be your corporate type headquarter cost, which would be rent, the depreciation, sometimes office supplies, anything any costs that are associated within that particular headquarters. Now, that usually carries the higher overhead rate, but most likely when you're bidding on an RFP, you're going to use Pool B, or your offsite rate, which are the majority of your billable employees. They're going to be mainly into that particular overhead pool. And typically, that carries a lower overhead cost because the majority of your billable employees are in the base, and there are very few overhead costs associated with that particular Pool B overhead. So an example would be, let's say you have a headquarters in D.C., and D.C. carries the rent, the depreciation costs, but then you also have another office in Alabama, and 50% of your billable workforce is in the Alabama office. Well, that's going to carry a very low overhead rate. So when a RFP comes out and it's asking you for labor categories that you already have as a resource within your company, you can use that low overhead pool to bid out, therefore making you as a company much more competitive out there. And we help companies develop and restructure their indirect cost rates, and ultimately look at your accounting system to make sure that it's set up correctly. So we'll get into GNA, or general administrative costs. Again, it's any general management, financial, administrative labor, or other corporate-related expense. Again, it's the GNA costs are incurred for the benefit of the corporation as a whole or your infrastructure. So it really includes your administrative and executive expenses. For instance, if you have a board of director and you need to charge or keep track of board of director minutes or fees, those will all be included in your GNA cost pool. All of your legal expenses, your accounting expenses, public relations, and any type of financial service you use would also be included in the GNA cost pool. Your business insurance, other specific taxes such as your B-poll taxes, again, any independent research and development costs, any bid and proposal costs, and other miscellaneous infrastructure or corporation costs. Let me go back one slide, actually. As a small company, we've seen clients that would actually purchase a townhome and put that expense on their books. And what that does is that it obviously increases your GNA rate so that you're really out of the competitive range. But keep in mind, folks, that the government looks at your GNA costs more closely than they do with your overhead and fringe. And it's mainly because, again, it's how you operate as a corporation, what your infrastructure looks like. So if they see a $500,000 townhome, they're not going to pay for it. Basically, you're developing these rates so that you can recover those costs when you bill the government. That's how you come up with a particular bill rate, or that's how you come up with how much it's going to cost the company to perform a specific type of service. Now, charging townhomes or buying a car and putting it into your books as a GNA cost, the government won't pay those. And ultimately, it'll hurt your company because it'll keep your GNA rate very high. Your GNA cost base is essentially total cost input. So it's every single cost excluding your GNA expenses, obviously. And examples are all your direct costs, your total fringe, and overhead costs combined. That also includes, all of your direct costs includes not only just direct labor, but also your subs, direct travel, and consultant costs. Now, before I go on the rate buildup, I don't know if some of you all have a material handling rate, but this is another area where sometimes a material handling rate is developed because an RFP states that what is your material handling rate, or how much are you going to load on subcontractor costs. And keep in mind that if you have a material handling rate that's developed, it really increases your GNA rate because you're stripping out your subcontractor costs, your consultant costs, and forming a new rate. So if you're struggling with high GNA and you do have a material handling rate, that could be one of the issues as to why your GNA rate is so high. So after going through what the direct costs and indirect costs are, how you build up a fringe rate, overhead, and GNA rate, then you ultimately get down to how much an employee costs the company and how you can price out a RFP or ensure that you're profitable within a contract once you have all that information laid out correctly. So in this example, we'll use a salary of an employee for $100,000. The raw labor broken out by 2080 hours is $48.08. And so to figure out the fringe on that direct labor, in this case we'll use 32%. You're going to, obviously add in the raw labor plus the fringe amount of $15.39. And then the next item is loading overhead, which is raw labor plus fringe, then multiplying, in this case, 24% for your overhead labor, which would give you an extra $15.23. And then the final load that we'll do is GNA, which combines the raw labor, the fringe of 32%, the overhead of 24%, and then you're adding in 8% GNA on top of all that, which would give you a total cost of the employee of $85 essentially. So what this says is that just because you hire an employee that costs you $100,000 a year, that's not the true cost of the employee. The actual true cost of the employee is $85. So if you want to build a government, you need to at least bill them $85 just to break even, and that's if your rates don't fluctuate year upon year. So in order to minimize rate fluctuations, you want to build in fee, and in this case we build in 10% fee. So on top of the $85 an hour, you build in fee of 10%. Now it gives you a bill rate of $93.48 that you're proposing or that you're billing the government. This is also a good indicator of if you're profitable off of this particular employee or this bill rate, because within your accounting system, you should be able to have a system that is set up so that you can incur all of your labor, you can incur all of your indirect costs, and at the end of the month, essentially, run a report to see how your costs are compared to, for instance, this particular bill rate. And then whether it's plus or minus, you'll be able to tell if it's profitable or not, and then make the business decisions that you need to do if the bill rate or the project isn't profitable. Now, a quick way of figuring out what your wrap rate is ultimately multiplying 1 or 100% 0.32. So in a calculator, it'd be 1.32 times 1.24 times 1.08 would give you your wrap rate for a quick view of this particular employee. And in this case, the wrap rate is 1.76, which is pretty competitive in today's world. As most of you know, that there are a lot of RFPs and contracts that are being awarded that are low cost, technically acceptable. So obviously, the lower your wrap rate, the more chance you have of winning that particular work. So when submitting an RFP or being awarded a contract, your contracting officer or DCA can actually ask for the basis of your support. So when you submit a fringe rate of, let's say, 32%, they might come back and say, well, how did you come up with this 32%? I want to see all of your fringe accounts broken out, and I want to see the base to see if you're actually calculating and coming up with a correct rate. So do you have supporting schedules? Meaning that are you able to provide documentation on the basis of your fringe rate? And we'll just use fringe here going forward. Or do you keep most of your information on spreadsheets? Now, spreadsheets, even though they can be thorough and detailed, as many of you know, they're very error-prone, and if they have complex formulas, multiple tabs in there, one misstep, or if that finger type could really affect the spreadsheet. Do you have reports that are generated through your accounting system? And most importantly, written descriptions. Do you have policies and procedures that support all of your basis of support? And in the third part of our GovCon 101, we'll go through the DCA, understanding DCA, and having policies and procedures for your company is vital in passing DCA audits, like a system audit or incurred cost audit, because that's what they go off of, is that if you have policies and procedures internally, they want to make sure that you follow it as a company to the T. So again, have a detailed explanation of how your costs are classified and how they're accounted for, how your costs are allocated out once they're incurred within your accounting system. For instance, your direct labor and your indirect labor. Whenever an employee fills out a timesheet, how does that labor get into the accounting system? Is it an automated function? Is it a manual function? And are they being allocated out correctly? And again, how your indirect rates are calculated. So keys to cover yourself going forward, get everything in writing from the contract award, any correspondence from your contracting officer, any correspondence from DCA, from your CPA firm. Always brief your contracts, know your contracts in and out. In the second part series of contract pricing and types, we actually go into a little bit more about contract briefs. Make sure that you exclude any unallowable costs from submissions. So, for instance, if you want to book your townhome purchase, you can. Just make sure it's not an allowable cost that's being billed back to the government. And submissions, I mean by the incurred cost submissions. As most of you know, or some of you know, that incurred cost submissions are due in January, June 30th. For help on incurred cost submissions, we can help you with that as well. Provide support for all of your costs being incurred within the company. And then, most importantly, notify your contracting officer or DCA office of any internal policy and procedure changes that could affect your rates. Again, some of the other things that we'll go through are report any updated info prior to final negotiation. So if an agency comes back with a BAFO or best and final offer type response, make sure that all of your information is updated. Name of the game is consistency. So make sure that all of your costs are always in the same bucket, and if you're going to make any type of change within your indirect rates, get that in writing, report that to your contracting officer or DCA, but make sure that it is consistent and it follows your policies and procedures. Maintain files on activity after award. For instance, your contract files should be kept for 7 years, essentially after the end, and accounting records 5 years. I know the FAR is great reading, But use FAR as a guide if you need to. And most importantly, if you can have DCAA come in through your contracting officer to do a review of your accounting system, having an email or a statement saying that your company is adequate to do business with the government is an ace in your pocket. I mean, that gives you, that opens doors for your company as far as doing business with the government. And with that, I'll go ahead and turn it over to Brian for our second poll, and then I'll be back on for the Q&A session.
Thanks, Sean. Thanks for taking us through all those direct and indirect costs. Very helpful to understand how to get those accurate costs so companies can build effective cost proposals and win profitable business. Plus, thanks for those guidance on the being compliant. People do want to avoid those fines, want to avoid those withholdings, and certainly want to avoid going to jail. So let's take another poll here. What is your biggest challenge? Are you using QuickBooks or Peachtree? If you're not, there's an answer for you. But some of those challenges include no automatic rate calculations. There's a lack of control for modifying costs after invoicing, a lack of GovCon-centric reporting. Maybe you're not getting the reports you need so you can get the insights into your business. Maybe you're already using Deltek, but you're still having some issues. Or you could be using something completely different. I'd like to get a little insight as we wrap things up today, so please complete the poll, and we'll be sharing those results with you now. Let's go with 5 seconds. 4, 3, 2, 1. Close the poll. Looks like a lot of you, the majority of you, are already using Deltek, but you already still have lots of questions. So I hope you found this helpful today as we're taking you through this. As always, we're about to open it up to questions, so if you have questions, start writing them into the question box. I'll also let you know that Sean and I would be available and happy to answer any questions you might have. So I'm going to turn it back to Sean for just a moment before we open it up to your questions.
Okay, so in looking at the poll, a lot of our small government contractors use a product called Deltek GCS, or it's now actually Deltek First Essentials, and we help with the implementation, and we also do a lot of restructuring and cleanup of that particular product. Now, there's also the QuickBooks, Peachtree, or other web-based type accounting application that really isn't geared towards government contracting. And DCAA, although they have approved a QuickBooks system before, very rarely will they do it unless there are certain add-ons or structures set in place. And the main reasons why are that QuickBooks and Peachtree, you can modify a closed month, meaning that if you close January, let's say, and those financials are out the door, and you're basing your invoicing or you're basing any type of bank reporting off of that particular month, QuickBooks allows you to actually go back into that month, and let's say you forgot a journal entry and you put in a journal entry and now it affects everything year to date. Most compliance systems actually require that a hard close be processed for that particular month, so that if you need to make an adjustment to a prior month cost, you do it in that current month, and that that there's an audit trail and there's record of that change being made. And the reason for that is that DCA wants to make sure that when you do bill the government, that if you did make a mistake in a prior month, you're affecting the current month financials or costs, so that when you do bill the government, it'll take effect within that particular month. So that leads to kind of the inaccurate reporting. Again, you can modify costs after generating an invoice, and that's pretty much a big red flag for audits. Also, in these web-based or these type of applications, they lack the automatic rate calculation and the ability to kind of bucket your your indirect cost pools right out of the box. So you rely on Excel spreadsheets, and again, which can be complex and error-prone processes. But ultimately, the most important thing, again, is having written policies and procedures, no matter what accounting system you're using, and following those policies and procedures.
Thank you, Sean. In addition to this webinar, there's lots of other resources available to you. The SBA, DCAA, the FAR, this website where you can download the FAR, FedBizOps, GovStore, lots of things available to you, as well as, I mentioned this is the first webinar in our series. The next one up will be contract types and pricing. That one will be on May 1st. And the third in the GovCon Accounting 101 series will be Understanding DCAA. We haven't set a date for that yet, but keep an eye out for it. It will be coming up. We also have training classes available. We saw some of you are using Deltek products. So, if you need more than just a 1-hour webinar to get your questions answered, we do have training classes which go into depth on a lot of these topics. It can be a very efficient and effective way to bring yourself to improve your professional skills and your ability to price proposals and do the cost accounting more accurately. We also have a blog that we post topics out on, everything from cash management for government contractors to even on direct and indirect rates. We have blogs on that. A variety of issues, everything around HR, IT, and accounting for government contractors we cover on the NeoSystems blog. And so now we're going to open it up to your questions, but at NeoSystems we're proud to say, go ahead, we've got your back office. So if we could pop up those questions, please. We do have a question. We always get the one question. Will the recording be available? And yes, we will make this recording available to people who have attended today or who registered for the webinar, and we should have that available to you next week sometime at the latest. We also have a question, do bonuses have to be included in the indirect cost, or can they be left out completely?
So the answer is yes, they have to be included in your indirect cost pool. Now, there's a difference between a distribution and a bonus, but if it's a bonus that you're offering to your employees, they can't be left out. It is an actual cost within the company that has to be recorded. The other questions aren't really related, and that's pretty much
okay.
The only question.
No, you were mentioning about wanting to keep the GNA rates low. Do you want to keep your fringe rate low to be competitive, or is it better to keep that high? How do rates? What is the government looking for in rates? I mean, because I know lowest price technically acceptable, but are there places where maybe a slightly higher rate would be advantageous?
Typical fringe. All right. So typical fringe rates would range anywhere between the 30 to maybe low 40s. Up to like 40%. Okay. GNA really range can be between 8 to 12%. Anything higher would start to kind of raise a little bit of questions, or could kind of throw you out of the competitive range. I would say, day and age that we're in now, 15%, 16% GNA is typical for the smaller government contractors. Now, an overhead rate, just to let you all know, is a good cost pool and, I guess, a bucket to use for developing indirect rates or putting costs in. I mean, that's really kind of one of your, I guess, the best way to describe it is a play-around type indirect cost pool. So, again, if you can keep your rep rate between 1.5 to 1.8, you're in the competitive range. Okay, so next question is, when computing fringe, is the base all labor, including unallowable labor? So no, the base doesn't include unallowable labor. Next question is, what if the bonus is in lieu of a rate increase? Can it be considered direct cost? So what I think you're asking is that instead of actually giving an employee a one-time bonus amount, you're including that particular bonus in their overall annual salary. So if that's the case, then that annual salary is based off of hours, and however many hours that employee charges to, whether it be a contract or an indirect labor account, it would still be considered as direct cost. So the answer is yes, because it's already wrapped into their hourly salary rate. Next question is, how do you know if your wrap rate is competitive? Well, that's a good question. In some industries, for instance, in the intelligence industry, I know that a competitive wrap rate is around 1.5. If you can get under 1.5 times an employee's rate, you're going to be very, very competitive. Within the company, you should know who your competitors are. Also, in talking with maybe incumbents, how they're doing, or finding that information out. You'll also know through your RFP briefings when an award does get awarded, and if you're on the losing side, you'll be able to get that type of brief. Your cost is too high, or your cost was too low. The more RFPs that you submit out, the more briefs that you get. Once the contracts are awarded, you can kind of figure out, obviously, where you stand, and just in business relationships in general, you'd be able to find out if your wrap rate is competitive.
What about some of the IDIQ contracts and GWAC contracts? Don't some of them post the pricing for different categories, and therefore you could come up with your own typical cost? You got your guess of what the cost of the salaries should be, so you can put together, estimate somebody else's wrap rate from that.
Sure. Yeah, that's a good point. And then also, if when you are ready to get a GSA rate, for instance, or a GSA schedule, you'll know GSA schedules from various companies' websites as well to see if you're within that type of range also. So that's another good type of resource to see if you're competitive. Next question is, what is a wrap rate? So a wrap rate is a summary multiplier of your indirect cost rates. So in this presentation example, we used fringe, overhead, and GNA. And each one of those rates are associated with a percentage. And when you combine the percentages together, you can get essentially a quick multiplier of how much it costs your company to keep an employee. So if your wrap rate is 1.5, it basically costs 1.5 times the employee's salary within the company to keep that employee operating and running.
To cover all your costs, to cover the fringe, to cover the overhead, and to cover the GNA. Right. All right, very good. Well, thanks a lot, Sean, and thanks everyone for attending. I think we covered a lot of ground today, helped everyone to get a better view of how they can more accurately account for their costs so they can build effective cost proposals and win the profitable business. Yes, we will have a copy of this webinar, the recording, available next week. And so if you have any more questions beyond that, please feel free to reach out to either Sean or myself. We'd be happy to talk with you. Thank you, everyone. On behalf of NeoSystems, have a great day.